In this video, we will be reacting to Palantir's biggest bears somehow feeling more bullish ahead of Palantir's earnings report. I'll play a few clips of this video from Everything Money and share my analysis along the way. Let's go.
A company that I think has a great future, and I've now, because the stock has fallen 80% from its high, I'm now interested in the company. 600 million, 750, a billion, $1.5 billion. Steady growth. Now net income.
Wow, different story.
580 loss, $1.2 billion, $500 million loss. Companies that are growing, even if they're losing money, can still be worth something. The question is, when can you get to profitability, and what does that mean from every single investment is the present value of all future cash flow? Their free cash flow is actually positive now.
Actually, yeah, I was shocked to see that.
Their full year last year, they had $320 million in free cash flow. They lost, it was getting bigger, and now boom, free cash flow. So hopefully they're starting to turn the corner.
So I think this is great analysis so far. They're walking their viewers through Palantir's profile from a financial standpoint, top line, bottom line, and free cash flow in terms of Palantir's ability to generate cash from its operations, less its capital expenditures and change in net working capital or anything like that. And it's awesome to see that they're finally coming around on Palantir, because this is a cash generating machine. It's just that they haven't reflected scale yet to overcome its stock-based compensation. We'll see if they get to the dilution later, but I remember that being a big hang-up before.
78.7% gross margin. What does that mean? It means for every extra dollar they bring in, 78.7 cents of it, almost 80 cents of it, is going to go to profit. Now, they have overhead costs, and as they grow, those overhead costs are going to increase. But this is a big number. As an example, what's Microsoft? Microsoft's gross margin is 68.4%. When Palantir finally is well past their overhead costs and generating profit, my guess is their profit margin is going to be somewhere around Microsoft's.
This was an issue previously for Everything Money. I don't know what about Palantir has changed such that they're now using some logic in their understanding and analysis of the company. I think it was the change in the stock price. It's crazy that you need the stock price to change to see clearly what is actually happening. But now you'll see they're walking through logically what the future outcome for Palantir is. Free cash flow is increasing significantly. Once they hit scale, it's only a matter of time before they're generating GAAP profitability. And then all of a sudden you're looking at a company that could be as profitable as Microsoft. Probably not as large in the near term or in the short or medium term, but definitely could be as or more profitable. And this is what they're missing before. It's like, you need to use first principles. You need to really think things through versus saying, oh, they're losing money today, therefore they're worthless. And we're finally getting some of this logic now that the stock price has fallen enough for them to consider it.
Palantir is currently at $7.97. I have puts at much lower prices than this. Not $8. I won't disclose exactly, but it is lower prices than this. So that way the price to sales ratio has come down.
So it's kind of funny he won't say exactly what price, but selling a put means you are engaging in a contract to buy 100 shares per contract, and any number of contracts he may own. He is required to buy Palantir stock if it is below that price, and in return he gets a credit. So again, I don't know exactly where he would be buying Palantir stock, but I'm sure it's around $5. I would guess $5. He has referenced $5 in the past, so it looks like he has committed to buying Palantir at the $5 range.
There are 17 analysts out there. They're expecting 5 cents per share in profit this year and $1.57 in 2026. If you apply call it a 18 multiple because it has growth potentials, if they hit this should be a $29 stock. Would you pay $7 or $8 today to get a $29 stock in 2026?
So I'm not really sure where he's getting the 18 multiple from. If I'm looking at Microsoft right now, their price to earnings ratio is 24 for that company. And if we're considering how Palantir is growing much faster, it's deserving of a much higher price to earnings ratio. A peg of 1 would be appropriate if Palantir grows 25% per year, then the multiple should be 25 times, not 18. But nonetheless, it's important to start to look at these profitability figures that are being forecasted by the analysts. We took a look at that heading into the Q3 preview for Palantir. And I do appreciate the analysis going into this that shows Palantir is significantly undervalued currently. So for calculating the DCF, here we are with a low of 12% revenue growth, mid of 17% revenue growth, and high of 22% revenue growth, and profit of 10% on the low end, 20% on the middle, and 30% on the high end, with a PE ratio of 14, 18, 22, and a discount rate of 17.5, 22.5, and 27.5. So I think the discount rate is just out of whack, and it should not be that high. Generally, you're looking at 10% for any company, and I think the profitability, as they say, is difficult to forecast because Palantir has not yet been profitable, but that, of course, could be higher. The revenue growth could be higher. I'm very much in favor of Palantir growing much more than 20%, and I think they're aiming for that as well. And then in terms of the price to earnings ratio, as we talked about, if Palantir's growing that fast, then they would be valued much more. And so it really all cascades down from there to show that these numbers they're about to present to us for valuation really aren't fairly taking into account Palantir's most likely outcome in terms of their financial results. So keep that in mind.
150, 320, and 560.
Okay.
Now, I do think we were very high on the desired annual return. And I do think that the profit margin, if they get to that profitability, will be much higher than 10 or 20%. But now, as you can see, it's getting much closer to the price that we believe.
So what have we learned from this? Well, we've learned that, first of all, Everything Money can actually apply some thought and generate some fair analysis, even though their numbers are still way off and a stock price of $5 does not seem realistic for Palantir. You can definitely get that in a bear market because everything goes out the window. But just bringing it back on track, I think Everything Money, and it's interesting because now that we have one of their hosts taking a sold put position and essentially being bullish on the stock at a lower level, now you're going to see a change in sentiment. Whereas when the stock price was higher, or a few months ago when the stock price was at the same level, but they didn't have a bullish position on the stock, you get totally different analysis. So it's very important to take into account biases of anyone that you are listening to. And then, of course, recognize that they still don't understand the company very well. They couldn't speak to any specific detail of the company. They don't understand the growth. They're just talking at a very high level. But nonetheless, it's encouraging to see them coming around as value investors because, of course, Palantir stock as an unprofitable stock that is growing super fast is not a traditional value play. But for them to be interested in it at this point, it does bode well for the valuation and in terms of the company being undervalued. And we will have to see Palantir's financial results going forward. I'm very excited to see how the company continues to develop. Let me know your thoughts in the comments. Until next time.